Hey there everyone, it is Wednesday, September 23rd. Markets just closed a few moments ago. It's about 4:15 on the East Coast, 3:15 here in Central Time, which is where I live. And I want to talk about the markets today, and there's also lots of news. I think the news is just full of it. I mean, it's just amazing some of the spin that's going on right now. As you all know, and I'm looking at MarketWatch.com. The bears stamp out the Fed gains. You know, earlier today we had the Federal Reserve come out, the FOMC, saying they're going to keep interest rates real low at 0%, essentially 0 to 0.25%. I'm not sure why that's good news, really, if you think about it, because all we're doing is, again, the morphine drip on the patient. Patient still lying in a coma and bleeding, and in severe, severe dire consequences. But we got the morphine drip going on. We're going to continue this crazy debt-fueled recovery, so-called recovery, and that's essentially all it is. But anyway, they're going to keep the interest rates incredibly low. And another thing that was kind of interesting too was the housing market, and this has been another pet peeve of mine too. You know, guys, if the government would just leave this alone and just let it correct, okay? You know, the people who are going to live in their homes are going to live in their homes. You know, people are going to stay in one spot for years and years and years. It's really not going to affect them over the long term. I wouldn't imagine too much, as long as we have a complete total, economic collapse, and it doesn't matter anyway. But for people who are going to stay in their homes for quite a long time, if everything does return to normal, which I can't imagine how it could, but if it does, if the strategy is that, it's not going to affect those people. But anyway, the best, right here, MarketWatch.com. The best news in the FOMC statement came from the announcement that the Fed would extend its purchases of nearly $1.5 trillion in securities to support the housing market. So essentially what we're going to do is via the FHA, which is going to be the new subprime mess, FHA, Freddie Mac, the government entities, they're going to start loaning again to whomever. That's what that is. And in their crazy attempts to try to stabilize the prices in the housing market. If the prices were correct, ladies and gentlemen, people would be buying. It's very simple. I'm a small business owner. If my prices are too high, you know what? I'm not going to get any customers. I have to adjust my prices. There's nothing I can do about it. And I'm going to get to the point where as I can continue lowering my prices, I'm going to start to see more customers. It's supply and demand. We've got way too much supply out there and very little demand. And until the prices are continue. Let's go back to Keynesian economics, which these people love so much. Remember the whole supply and demand curves and all that back in your college and high school years? Well, the point of equilibrium, remember all that? Well, obviously the price is way too high. And you got to get the prices down before people are going to be interested in buying again and feel comfortable buying at those levels again. So to have the government come in and prop this stuff back up again, it's just going to hurt all of us. It's hurting all of us, guys. This is just absolutely insane. Another thing that was interesting in the markets today is, of course, we had the Dow rise up to about 9,900. 9,917 was the high today, ever so reaching the 10,000 mark. Because again, of course, the equities markets are happy for some reason that the interest rates are going to continue to be low, which again is just absolutely insane. But then we had a sudden market drop-off within 2 hours. And one thing I wanted to point out to you guys, because nowhere on here, of course, is there any information as to what happened, right? Just bear stamp out Fed gains and Dow's down 80. Well, let's go ahead and look at the USDX, shall we? It's the dollar index. Just after 2 p.m., somebody just dumped the heck out of the dollar. It went from almost 76.2 down below 75.9. Huge drop. Somebody dropped a bunch of dollars. And of course, with our limited information, we can't tell how much, volumes, things like that. Of course, this is just an index anyway, so there's really no volume per se. It's just kind of a measurement against a basket of other currencies. But very clearly, somebody just dumped the dollar. And then all of a sudden, the market, the equities market went down too. And then, after that, about a period of time, about an hour, the dollars just suddenly rose for no reason. So here's what I'm saying. I bet you $1,000, and I'd like that in gold, please. I bet you any amount of money or currency, whatever, that the Federal Open Markets Committee, they basically saw this action in the dollar market. I bet you anything they took money out of equities market and put it back into the dollars so that we could see this crazy climb back up above what it was earlier today. It's almost at the high, close at the highs. I mean, it's ridiculous. So they probably saw that huge drop and they said, oh shoot, let's go ahead and take the money out of equities and shove it into the dollars, and just to keep it, keep it from falling. Another thing too that's kind of noteworthy too is they're talking about, here's another spin about the declining dollar. Hey, you know what? The silver lining is, there's a silver lining for the greenback, guys. Did you know that? A weaker U.S. dollar is helping pad returns for those investing in foreign stocks. Well, yeah, that's true. Foreign stocks have been doing terrific. Asian markets, and especially as I'm sure a lot of you out there have heard Peter Schiff talk about. But but for the rest of us, we're not in the Asian markets and everything else, we're getting creamed. And I love that spin. Hey, there is a silver lining as long as you're you're the lucky people who are invested in the Asian markets. That's terrific news. But for the rest of us who are not, that's not such terrific news, okay? I mean, come on. God, the spin is just ridiculous. I know there's a lot of people too on YouTube that's been talking about the equities markets crashing and things like that. I agree. I think in real terms, I think there definitely will be a stock market crash. Absolutely. I'm going to have to disagree with a lot of my colleagues out there on YouTube who I respect tremendously. But I will say that I think in nominal terms, we still may have a rise in the Dow. I mean, we could actually be 12, 15,000, no problem. As long as they, and here's the thing, though. I will throw out a caveat out there. If they can keep the dollar where it is today, above 76, then yeah, I can definitely see the equities market dropping in nominal terms as well. But if they can't hold the dollar, and the dollar starts to go below 70 and into the 60s and things like that, you could actually absolutely see the Dow. Now, if the Dow is at 12,000 and the dollar index is at 65 or 60, well, in nominal terms, yeah, it's at 12,000, but in real terms, in today's dollars, yes, it's probably worth 6,000 or so. So then that's correct. The markets are actually crashing, even though in nominal terms, in number terms, it's actually at 12,000. So we're going to have to keep an eye on that. As long as they continue to prop up the dollar, I can kind of see, there seems to be this kind of relationship as the dollar kind of hangs around 76 or so. The Dow's kind of inching up toward the 10,000 mark, and it just seems like as because at 78, let's say, or 79 when it was just a little bit higher, the Dow was a little bit lower. So you see what I'm saying? I think there's really this inflation relationship. So as the dollar continues to fall, of course, you need more dollars, and our Federal Reserve System is definitely doing that. It's printing a bunch of dollars. They're going back to the banks, of course. The banks aren't lending because they have to keep their reserves up. And so what are they doing to it? They're taking our money, our tax money, because we get stuck with the bill, of course, and they're basically taking that money and going to the huge casino known as the Wall Street. And that's why you're seeing all this equity in the markets, because without that, we wouldn't be at this level. So that, and coupled with the fact that the dollar is falling, I would continue. I would think that the markets will continue to rise, but not again in real terms, guys. I mean, don't get too excited when I say that the market could be at 12 or 15,000, because the dollar will be worth a lot less, and in real terms, you're losing. So I would stay in gold. I would stay in commodities. The oil continues to do well. Gold certainly is doing well. And I would definitely continue that investment strategy if you can, as much as you can. So anyway, that's about it for now. Let's keep an eye on the dollar, guys. I think that's going to be extremely important. If we have the dollar fall below 76 some more, just keep an eye on the Dow. I bet you anything it's going to go over 10,000. Thanks for watching, guys. Please rate and comment on my videos. Subscribe too if you could. Let others know. Make your own videos. Again, 1207. Please support that. HR 1207, auditing the Fed, and hopefully we can kind of open up and bring at least awareness to what the Federal Reserve System is doing and who they are. Anyway, thanks guys for watching, and we'll talk to you soon. Bye now.